welcome to the Airtree Angel Investing AMA. As I said earlier, we're really fortunate to have three of the top people in the country, and some actually out of the country, Kim, to actually talk about angel investing. My name's Callum. I look after the community and partnership side at Cake Equity. Work with Jason and the team there. We touch a lot of people in across the space, so super excited to be helping with the event today. I might just kick off, maybe hand over to you, Jackie, to start with. A bit of background for Jackie, if you don't know. Most of you, a lot of you will know Jackie, but she's also had experience on both sides of the table. So has worked in startups in the UK earlier on in a B2B SaaS startup as chief of staff. Has also spent some time with NAB Ventures looking at investments into the fintech space. So got some great experience from there. And then over the last 3 years, looking more broadly at investments with Airtree. And Airtree have spent a lot of time and energy really, and are really passionate about trying to develop more early stage investments. So I'd maybe hand over to you, Jackie, to maybe give a little bit of context of why is that so important to you and the team at Airtree, and what are some of the things that you guys are doing to help encourage it?
So thank you for that intro, by the way. You paint me in a very, very flattering light, which I always appreciate. Angel investing is really, really important to us for a few reasons. I think we're in the kind of slightly difficult situation here in Australia now where angel investing is actually in decline. And that's a real problem because without angel investors, startups often can't get that kind of crucial funding that gets them ready for institutional investors down the line. So where kind of funds like Airtree come along and write the first check. And so angel investing is kind of the lifeblood of the startup ecosystem. And we've been slightly nervous at the kind of declining numbers. And as a result, we've spent a lot of time over the last year trying to foster and encourage more angel investors into the Australian ecosystem. It's not also just number of investors. I think the diversity of the angel investor base is a real area that we'd like to kind of contribute to improving. I think the current angel investors are very often kind of wealthy, usually men from kind of finance and property, sometimes mining. And while it is amazing that these people are investing in the early stage ecosystem, we want to open up angel investing to people who have built businesses before or have incredible networks of really talented founders, but don't necessarily have the capital or the education yet on how to be an angel investor. And so we launched the Airtree Explorer program back in September, and that was it. That's kind of an education program that's designed to help upskill people who want to become angel investors, who have these incredible networks, and then also kind of empower those who don't maybe have the capital to invest by we help get those people on the ladder. If they bring us an investment that we end up or a company that we end up investing in, we give them a kind of a small check to invest alongside us and be an angel investor on the cap table and kind of get that experience, get those runs on the board as well.
Yeah, I've been fortunate enough to have a lot to do with Airtree's attempts to help the early stage space. I've been in the Airtree Explorer program recently. It's been a wonderful program. I think it ran for about 12 or 14 weeks, Jax, and we learned a bunch of stuff about how to invest and how to be a good angel and the financial aspects and a whole bunch of really important information. And even coming from the situation that I'm in, where I've run multiple rounds myself and have angels on my cap table, and at Cake we're always looking to help founders, I still learned an incredible amount. So thanks for having me in there. I also wanted to point out just a bit of a funny story about your open source term sheet and your open source ESOP documents from the early days of Cake. I'm sure many founders and angel investors have turned to these over the years to help them navigate how this is all going to work in the beginning. But Cake had a unique interaction with them where we tried the very first MVP of Cake actually had those documents built into it while we were trying to work out how to streamline and simplify some of these early stage transactions. And we've spent a huge amount of hours since then perfecting that, and that's the Cake platform as it is today. But yeah, like super strong affinity with those documents, and I'm sure I'm not the only one in the Australian ecosystem that has a story like that. So thanks for that.
Nice. Thanks, Jace. And Kim, you've had experience on both sides as well. Obviously, Mr. Yum is killing it, so you're a CEO and co-founder there. But that's not your first startup you've been involved in. You've been involved with a number of them. You're also involved with Pitch Black. It helps out startups as well. So be kind of interested in some of your insight from your experiences, particularly as a founder, I guess, in terms of how you went about that early stage, and what are some of the learnings that you got out of that.
Yeah, thank you. Thanks, Carl. Yeah, thanks for reminding me just how long the journey's been. Always seems like Mr. Yum came out of nowhere and exploded in 2 years, but it's been a long ride getting to where we are, and meeting lots of great angels and investors along the way. Actually, one of the reasons that I wanted to jump on this session today is because I'm in LA and I've been here for 6 weeks, and I have just seen the stark difference in approach, like instantly, to investing, and it's really caught us off guard. Like, you hear about it, and you hear about like walking into a cafe and you just talk to anyone about your idea, and then like the next thing they say, like, I can connect you with these 3 people, and like, do you want investment? And it's just so true. It's like a really different approach to getting into an investment here. But I'll keep it like mostly Australian centric, knowing we've got a really Aussie audience, and really try to like empathize with the how hard it is as an early stage founder to find an angel that understands your business more than just giving you $50,000 or $100,000 or something like that, but it can actually help in a really strategic way. Yeah, I'll leave that with you, unless you wanted me to actually like jump into that answer.
Yeah, well, I think that'd be great if you can just talk a little bit about your experience, and I don't know whether it was the first round that you did was like 700,000 odd. I'm not sure, but maybe you could talk a little bit about that.
Yeah, sure. Our very first round happened about 6 months after we started Mr. Yum. Probably one of the first things to kind of reframe, like, the word angel investor is such an elusive term, and it just doesn't tell you anything about the characteristic and the profile of the person you're looking for. It's like looking for co-founders. You're like, what am I looking for? Like, who are these elusive co-founders? Who are these like elusive angel investors? So I really wanted to like start on that point and clarify, and Jack's like come in and help me out on this, and Jason, you too. I think an angel investor is, in Australia, like if you go on LinkedIn and you search angel investor, you'll find some, but you will not find 95% of them. They don't have angel investor on their LinkedIn profile. They look like people who operate in a specific industry, who are like nodes of influence in that industry, and have some kind of thought leadership in that industry. They might make 200, 250 plus a year, 200 grand, 250 grand a year plus. And they've got they've got a spare 25 grand to throw at an early stage idea that they know that the likely returns on that is that it won't be coming back. So they're a little bit risk taker. They've got a bit of a float. They've got some kind of interest in a particular category. And I think when looking for an angel investor, the most important thing is to go and find someone that's an expert in that area. Like for our case, look for people that are hospitality experts, people who run big groups. Our biggest customer became our first investor, our lead investor in our first round. And they helped us way beyond the money. They rolled it out to all of their venues. They help us strategically on all product development and ideas and what they're seeing in the market and trends. And they also share a lot more data with us than like some of our other customers will. So if you go and target experts in that industry, they resonate with your problem space straight away. Like you say something, you literally like say one line and it lands straight away, and then they talk. And a great angel investment conversation is you tell them your idea, and then the next like 15 minutes, they're just throwing like ideas back at you. They're going, we can do this and we can do that. It's just so invigorating compared to a angel investor conversation where they don't understand your space. You're trying to justify the problem to them. You're trying to make them see the solution that doesn't exist, and they won't see it. And then you've wasted all your time sharing all of this information with them when you're not going to get their money or their support or their strategic advice. So I think my biggest lean is like, look for someone who understands your problem space, and you're much more likely to close that investor, not just for capital, but for a lot of future strategic advice.
A huge amount of additional value that they can add through that whole process as well.
To add to that, Cal, just like the first round, those first rounds, the angel rounds, I think is a great way to validate your company, validate your offer, and validate where you're at. So if you're talking to someone that has experience in your industry and you're getting one of these great sessions that Kim's talking about, where they're really, jamming on where your business can go and the problems you can solve, and there's a lot of energy, it's a fantastic way to, for you to feel like you're on the right track, which can be really difficult for founders early on.
Or if you're on the wrong track, they can help you redirect, I guess. Just picking up one of your threads, Kim, and also one of the we've had a couple of questions about the comments about decline in angel investing, and which you made, Jackie, and I guess there's two things there. One is a couple of questions about the stats and where that's coming from, but also to pick up on your thread, Kim, about, you've noticed just in 6 weeks being in LA, a huge difference in terms of people, the level of engagement about it. Do you need to be in the Valley to be a successful angel investor? Are there good opportunities here? Jackie, I'd love to get your thoughts on this.
I think there's never been a better opportunity to become a great angel investor here. I think if you're in the Valley, you're competing against thousands and thousands of angel investors, and those angel investors are kind of Elad Gil and like these people who have done these incredible things with these amazing track records, and so hard to differentiate yourself. If you're here and you are helpful, you move quickly, and you act with conviction, people will want to work with you. It's and if you really dedicate time and effort to it, you can quickly turn from kind of outbound focus looking for founders to having loads of people refer startups to you, and you can get the choice to invest in all the very best companies coming out of Australia. And like, you've seen this happen, right? Like Matt Allen is a great example of someone who kind of gets the choice on like every single company raising an angel round, because he's proven time and again to be like a really helpful investor and like move quickly with conviction, always be helpful, and then he gets the choice, and then that delivers amazing returns for him. We actually, if you're looking to kind of for inspiration on great ANZ founders, angel investors, John Henderson, my colleague, wrote a series of blog posts last year called The Halo Effect, which is on the Airtree Medium page, and it was kind of profiles of all the very best angel investors in Australia and New Zealand, and kind of their theses and how they've built their track record and everything else. So I highly recommend looking at that. There's kind of everyone from Matta and April to Lee Jasper to Reynolds, like lots of different people. So highly recommend that if you're trying to upskill.
There's some real gold in that, and we'll share that with everyone after this, because it's definitely worthwhile having a look at it and seeing the approach that those really successful angels actually take. Yeah.
Matt's about to get 100 LinkedIn messages.
It's great. He'll love it.
More than he already gets. Oh my God. Actually, I'm meeting with him today as well about Tractor Ventures. He's got these cool new way of funding things too via venture debt. So check that out.
so flipping on the other side of that, we've got a number of questions about, as a founder looking at that early stage, how do you actually build that investment list? Kim, you spoke a little bit about it, but if you don't have those networks and you don't know those people who might potentially be investing in your company, I know there's some resources out there, but how would you go about actually starting to build that investment list? Jace, I don't know if you've got anything from your perspective.
Yeah, what I normally tell people is go get the Airtree investor list first. That's not a shameless compliment. It's probably the best list we've seen of current investors in Australia. And on that list, there's about 100 VCs and 100 angels and 100 accelerators or thereabouts. And it talks about what stage they invest, what industry they invest in. And so you really want to narrow that down. So you get the whole list, you narrow it right down to people that might be interested in whatever you're doing and the stage that you're at. And then you try and build relationships with those people. You don't go after them and say, hey, do you want to invest? You got to expect it's going to take time to build a relationship. And so if you don't know them, you need to ideally find someone that you know that does know them and get a warm introduction. That's normally the best way. I think building a network is one of the most important skills as a founder. And this is just another example of where you need to really be, building a great network of people that trust you, so that then you can, continue to find good people that can support you financially.
Jason, I might actually, I don't know if I completely agree with the, sitting there waiting for warm introductions. I feel like it's easy to say once you've got a network, and I think back to when I was much younger and I was first starting out in building a company, and I didn't know anyone, you don't know anyone. And then to say, well, you have to get a warm introduction to get into someone, it's like, well, how am I going to do that? Do I have to go and hang out at bars for 3 years, or where am I meeting people that will connect me into other people? It's actually really, really daunting to think if you don't know anyone, you won't get to know anyone else, which I think is what warm introductions insinuate. I think
that's really cool. I think that's really true. Just I'll just jump in quickly. So being from the Gold Coast was a real challenge for our company. The whole first year, I just felt like running around in a little echo chamber here, and I do I'm sorry to anyone on the Gold Coast that I'm insulting, but it was really, really hard to learn how to do things properly here. And then I got to Brisbane and I learned more, and then I got to Sydney and I learned more. But if I was able to really circumvent that by going straight to some industry leaders, as you're suggesting, then that would have helped Cake a lot. And so, I think it's if you can do it, then I think it's a great idea, Kim.
I think tactically, there's a really famous saying, if you ask for advice, you get investment. And if you ask for investment, you get advice. So if you ask someone too early, they're just going to tell you what's wrong with your business. And then you feel like you have to listen to them just to get their money. But actually they never wanted to give you money anyway. So don't worry about it. But on the flip side, if you reach out to someone in the industry, you say, hey, I'm working on this thing. I've got something this is the problem we're trying to solve. Can I spend 15 minutes showing it to you, get some advice, build their advice into your product? Over time, you'll start to understand, is this person likely to want to invest? Have they invested any time and headspace? If they've invested time and headspace into you and your idea, they may be interested in investing money. If they haven't invested time or headspace into the idea, they're probably not going to invest any capital that early. So that's a hack from a really tactical point of view. If you're going to reach out to someone, try and just I connect with people on LinkedIn all the time. I don't even message them. I just go connect. If they accept, I message them and, hey, this is what I'm doing. We're in this, space. And 9 out of 10 of the time, if it's really if it really makes sense to them and it was top of mind, solving a problem that they've been thinking about or want to solve, they'll get back to you because it's top of mind and you're helping them with something that they've been struggling with.
I'm going to both agree and disagree with Kim there.
I
totally agree on the cold outbound thing. Just think it's totally impossible to build a network from scratch. It just takes forever. And I'm very open about this, and I know a lot of VCs are, which is just my email address is everywhere on the internet. If you look at any blog post I've written, any one of these calls I do, it's I'm Jackie at Airtree.vc. Email me. My DMs are open on Twitter. All of those kinds of things. It's I just think, particularly for kind of people from underrepresented groups, they're just never. It's it's going to take too long to try and find out. Otherwise, I respond to every cold inbound I get. But
that's awesome, by the way.
That's
so great. Well done.
Yeah, the thing I disagree with is the LinkedIn, from a very tactical basis, the LinkedIn connect with no message drives me insane. So I probably get like 30 of those a day. And I'm like, I don't know, who are you? Why are you connecting with me? I don't even think
we're friends yet. I'm going to check. I don't even think we're connected yet.
I kind of hate LinkedIn desperately, but like, I think if there's a message in there and I understand why you're connecting with me, like I'll definitely accept and reply. If I don't understand why you're connecting with me, I don't. So that's like a really tactical one.
Yeah, that's good. It's good.
Extrapolating this point a little bit, Cal, just because someone also asked like something about what's a gap in the market currently. So what I've noticed a gap, and someone had a great idea on a call I was on recently, I can't remember which one, but quite often I see, and it's well known, that founders will be working with an angel or a couple of angels over a long period of time thinking they're going to get investment when that angel actually doesn't invest. So it's actually not known who invests and who doesn't invest. And I think particularly in some areas of the country, it's more evident. So as a founder, you need to actually just, be open and ask the question, what have you invested in recently? What industry was it in? What stage was it in? Because I really need to know so that I can make sure that I'm not wasting your time. And you're very polite about it, but you need to be upfront about it. And I think time is of the essence when you're a founder. And that's one of the biggest learnings that I think can hack your raise quite a bit.
Yeah, you can't afford to be sitting there spinning wheels. Kim, a question for you, sort of following up around, you were able to actually tap into some great people who had really good industry knowledge. Question from Murad about, he's got some people who have got really good industry knowledge, but he's actually a little bit unsure about their alignment and their expectations because they're not experienced in dealing in the startup space. So how important is it that you really understand your investors in terms of the alignment around their motivations and their return expectations and all that sort of stuff?
Yeah, that's definitely a challenging one. That's why, to Jason's point, if you ask them, what investments have you made in the past, like when we meet people in hospitality that say, do you want an investment? We're like, have you invested in technology before? Just to get like a baseline of, what are we working with? Like, are they going to ask me for a cash flow projection at angel stage? Like, probably not going to happen. just to understand what you're dealing with, because that's how you value brick and mortar businesses. And if you're dealing in a brick and mortar industry, then that's the kind of valuation, like methodology that they're used to. So they're going to expect the same. So if you just can get a kind of a guide on how they'll approach that conversation, I think that's helpful. And then if they are really new, then I think you arm yourself with case studies and examples. So you go like, find a similar industry, like for us, call it Shopify, like being, the e-commerce platform that they are, and we're in food e-commerce. So we kind of, point to them and we go, they're on this multiple at the moment, and you pick something that's public, something that kind of investors recognize as a public company, and that the profiles are out there and the numbers are out there. So you kind of choose some like aligned company that you can show their journey and what they did and fundraisers that they did and at what valuation over time. I think that's what helped us, because it was hard, of course, when you're we had friends that were investing in Mr. Yum for the first investment they ever did. They kind of felt like they had to just go with what you said, which, you want to, they're smart people too. So you want to arm them with information so that they feel like they're making the right decision.
Okay, awesome. Jackie, we've had a couple of questions around like kind of the investment process and like how do you go about being a successful angel investor. You mentioned Matt Allen, and you spoke about a few things about what he does in terms of being acting quickly but what's the sort of with the angel investing hat on, what's the sort of process you'd be going through? What are some of the things that are really critical to actually being successful from an investor in this space?
So I think kind of echoing back on Kim's point, like there's no numbers at the angel stage. There's no way of building a budget that's even founded on sensible assumptions. Like it's kind of it's real finger in the air stuff. And I think what you really want to understand as an angel investor is, who is this founding team? Do they have really complementary skills? Do they look like they kind of respect each other and worked well together? Are they very resilient? And is there something that means they have a unique insight into the problem they're solving, that means that they will build the best possible product to solve this problem in a way that no one's been able to do before? The kind of why now of investing is really, really important.
Yep.
And sometimes that's an insight on a market, sometimes that's an insight on a product, but there needs to be something there that's the reason why no one's done this before. So kind of really good team, a market that's either big today and underserved or could be very big in the future, and a kind of understanding what that unique insight is. Sometimes there might be a product already, and if there is a product already, don't think too much about revenue. Think about kind of engagement and customer love. Are those first early customers, like, do they absolutely love the experience, and are they kind of using it in spite of the fact that it's extremely buggy and doesn't work half the time? I think that's kind of the short version.
Okay. I guess just following on from that one, there's individual angel investors, and then there's a lot of syndicates around there. There's Brisbane Angels, there's Perth Angels, Melbourne Angel groups. So there are different groups operating this. Any insights, Jason, around sort of angel groups versus individual angels? And certainly there are enough angel groups around at the moment who have funds to invest. Is there an issue there at the moment in terms of how they're actually executing that, or what's happening in that space?
That was a long question. I'll do my best with that one. So yeah, there are enough angel groups out there. Well, there are some. I wouldn't say there's enough, because the investment quantity isn't really high enough to where we want it to be. But there are angel groups out there, and they do invest. So the groups you mentioned all invest. And for me, I think when choosing your angels, it comes back to Kim's point. You want to try and find the people that believe in you and believe in your vision, and have experience in your industry and can back you all the way. And so if they're a member of the Brisbane Angels, then they'll normally go to their network and help you get your funding. If they're in the Perth Angels, or if they're in whatever group they're in, then they'll normally go to their group and they'll support you in building your your investor relationships. In a good situation, that's sort of how you want it to go. So if you go into the groups cold and you don't know anyone, and you rock up and just pitch, and you're probably going to have a bad outcome. So I would, it really is a lot around the people. And then look, are there challenges? I think in general, I think the investment processes are a bit too slow. I think they're a bit too arduous on the founders and the expectations of the founders, and that can sometimes come from the backgrounds of the investors. And I don't mean this in a negative way, and I'm super supportive of founders, but of angels. But there is sometimes a mismatch between the startup world and the angel world, and that can create some slowness and some complexity that doesn't help the startup, and I think slows the ecosystem down a little bit. And that's an area where Cake's looking to try and learn and streamline and simplify things and bring best practice to the fore, in partnership with Airtree and the other great leaders of the industry. Not that I'm saying Cake is one of those, but like all the good people, we're all just trying to make sure we have the best learnings that we can to speed all this up so we can get more deals happening. And I think a lot of the angels are looking to learn as well, and get there more quickly, so they can be part of the solution, even more of a part of the solution too.
Just to jump in there, I kind of agree with Jason on in fact it comes through in all these surveys of founders. What do you care about most in an investment process? And speed and conviction come out number one all the time. And I think the difficulty with these angel groups sometimes is it's kind of decision by consensus, and can take too long. And so I think the very best angel groups often give trust to one person or a couple of people to make decisions quickly. And that's kind of a way to get around the speed when it's a group of individuals.
Right.
There's some cool new angel groups popping up, like Archangel, which has got Rain and Quinton and Ben and a team behind them. They seem to be doing some really good things. I've met them recently through StartMate, and so there's more and more groups popping up all the time. I do like the Angel Loop, like, just to give our partner Simon a little plug. He put together an incredible network, and he's like almost single-handedly put together about 10 or 15 new mini angel groups all around regional Queensland and northern New South Wales. You're going to take your hat off to him for his endeavour there, and he is definitely helping early stage companies to raise. So that's kind of cool. That's kind of cool. So I remember once I pitched in Gympie, and it was their first ever angel meeting, and it was like they were looking at like a strange animal from another planet when I presented, but it was a super awesome experience.
Kim, I got a question for you, just about like when you were pitching for your first investment round, what stage was your startup at? And Jason, it'd probably be good to get you to answer the same question as well. Did you hear that, Kim?
The first round, yeah, I heard that. Can you hear me?
Yeah, I'm breaking up a little bit. But I might throw to Jason. Maybe Jason, you can answer it. And Kim, I think your connection might be a little bit unstable. So what stage were you at when you undertook your first raising, Jason?
Yeah, so we, I guess when we decided to go all in, so we've done some early market research to see if there was a real problem. So we knew the early stage cap table space was a problem. We'd spoken to Aaron Berkby and other industry leaders in Queensland. We did about 10 different interviews with startups, and they were all using, manual, crappy old processes. And so we'd validated the problem. We looked at the global trends, and the global trends are really towards digitization of the capital markets, private capital markets. And then we were really passionate about helping entrepreneurs and innovation. So once we decided that those ingredients were there and we were all in, we were happy to raise a little bit of money. We had a consultancy that we had to close down, so we were self-funding. We had to close that down because it's really, it can be hard, I should say. I have seen some companies successfully raise with a consultancy, but we chose not to, and it's normally frowned upon. So we shut that thing down, and then we raised a little bit, and we couldn't raise much, to be honest. It was pretty difficult. We just got like 50K, and then I think we got about a couple of hundred, and then we did a rolling close on a convertible note, which went on for quite a while, until we used that funding to hit milestones. I think the great thing about having a pre-seed like that, or friends and family round like that with a rolling close, is it gives you a little bit of funding to get some traction and hit some milestones. And we managed to get our MVP done and our first customers done, and we did some things which at the time we thought were quite good, and in hindsight were quite crap. But it was enough to get a bit of interest around us that we might actually do something. And that's when we were able to do our seed round, which was like a priced equity round, which was a 500K to 1 million round, which we did mostly pre-COVID and then a little bit post-COVID. Not post-COVID, but post-lockdown or whatever. Remember in the middle of last year, it was like everything was locked up. So we did a bit before and then a bit after.
Awesome. Kim?
What
stage were you at when you started raising?
We were really quite fortunate with Mr. Yum. We had Pitch Black, as you mentioned before, which was a consultancy that we ran, and the first 6 months of Mr. Yum, we self-funded out of cash flow. So I think a little bit of a different position, because by the time we did get our first investors, we had a product which, talking about traction and how quickly you can get traction. Our first product was a visual menu built on the table, which is like a backend for non-developers. Which is just a spreadsheet on steroids, basically. You put in the menu items, you drop in the photos, and away you go. We got a junior developer to build a React Native front end. It was done in two and a half, 3 weeks. And we started getting that product into hospitality businesses just to see if it would go anywhere, you know, like the chances are that people didn't want to scan a QR code and that they didn't want to see a visual menu, and we would have just put the idea in the bin and never, you know, talked about it again. So at the start it was, so we had a product and we had customers by the time we didn't have to do our first raise. But my previous startup, which was the first time I raised capital, it was pre-product, pre-launch. And really that was just people that we knew. It was largely, it was like 500 grand. It was friends of friends. Like, it was a consumer idea. You could buy a home cooked meal from people that lived around you. It was very hypey at the time. It was like Uber was getting big and people thought the gig economy was gonna, I mean, people thought that idea would explode, and it didn't. But yeah, that was very much off the back of a pre-launch, and we had, I think, like 5,000 pre-signed consumers and like 200 cooks, and we spent like every afternoon talking to all these cooks around Melbourne at the time. So it was just off the back of like interest and you know, being able to get pre-launch hype, but we never launched the product. We never took the cash in the end. So, but yeah, that was probably a more kind of similar experience to what people will go through their first time, because building a product and having a team around you is a luxury.
Yeah, I've seen so many different ways that this has happened the first year or two or three, from all the different founders I've worked with. There seems to be an infinite number of combinations.
We did use a safe note though. So it was an instrument that's super fast, you know, a few pages. Wrote like a really easy to read, to understand template for non-sophisticated investors on how to understand a safe. And it did mean that we didn't have to lock in, like, you know, liquidation preferences and all the things that you don't understand at the start. And we learn along the way. It does mean you don't have to have those conversations with an investor that doesn't know. And honestly, at the time, you don't know either. You're like, what does this mean?
Yeah.
No idea. So, so yeah, safe's a good, convertible notes are pretty much the same, just a little bit of a different instrument, but both hacks for getting funding and downside protection for the investor and moving fast.
Awesome. Jackie, one of the points here from Andrew was, you know, from an angel group perspective, is the feeling that, you know, the angel groups are prepared to invest, but it's actually getting other angels to actually participate in those rounds as well that can be problematic also. You know, as we kind of started the conversation, you know, you've got the Airtree Explorer program. What are some of the resources, like if we, you know, we know we've got people on the call who are actually looking to actually start in angel investing. Where do they actually start that process? How do they actually learn that? We referred to some of the articles which we'll send out. But what are some of the other, you know, if you were starting out, where would you be starting?
Well, obviously I'll plug the Explorer program, so I'll start up front with that, which is like apply. We'd love to have you, and it'll make the whole process much easier. We're going to run another cohort in a few months, so kind of keep your eyes out for that. Maybe follow us, sign up to our newsletter, and you can see that. If you don't do that, I think talking to people is always a great way of figuring out how they did it. I think you really, like, the kind of worst possible angel investor is the angel investor who moves slowly and then gives the company a term sheet that has funky terms, and it kind of hobbles the company for the rest of the time, because, like, you know, at that early stage, founders often don't understand as well, and so it's kind of, people enter into this agreement that means that kind of 2 or 3 years down the line, when a VC comes and looks at it, they just kind of get terrified, and you end up having to go through this whole process of just doing loads of expensive legal work to try and unwind something, or it ends up being a no for that reason. And so I think to become a kind of really friendly angel investor, I think you should kind of learn the different instruments and the different terms as a way of understanding what's normal market practice and what's friendly to the founders. And so the YC Safe is a great example of that. They've kind of standardized that. I think we've open sourced our Airtree term sheet, our standard term sheet, and this is literally, I mean, like, we actually download it off that website when we're writing our term sheets. So it's all there, and we've kind of written explanations of what all individual terms mean. And that's a good resource to go to. I think you want to learn a bit more about cap tables. Obviously, like Cake is great there, and understanding, what percentage of the company you're going to own for different amounts that you put in, and what different valuation changes mean for the value of your holding at the time. I think there's an important distinction between kind of angel investing and venture capital investing. So we, as VCs, have to invest. We have a big fund, so we have to invest in companies that could go on to be worth, sometimes billions of dollars, for us to be able to kind of make the required return for our investors. And so we invest in these kind of real outlier companies, and we understand that many of those companies that we invest in may fail or may not grow enormously, and that there will be a couple that are huge. And that's kind of the game that we're playing. For angel investors, it's not the same thing. I think kind of multiple of investment is more of a realistic way of thinking about whether or not to make an angel investment. Do I think I can 10x this? I can 10x my 10K investment. And if I invested a $3 million pre-money or a $5 million pre-money, how big do I think this company can get? And it doesn't necessarily need to be $1 billion company. If this company sells for $50 million to a large beverage company or an industry participant, I can still deliver a really, really good return for my investment. And that's probably the difference there as well.
Yeah, okay. So what you're saying there is your average check size that you're actually investing, given the size of your fund, just really wouldn't work on an individual angel basis. Yeah, is that part of it?
Well, and also I guess we think about investing as can our investment in this company one day return the fund?
Yes.
And so that is a really big bar. Can we have a $150 million core fund? You're essentially saying, can my 10% stake be worth $150 million, which means that can the company be worth 1.5 bill? And that's pretty enormous. Whereas if I'm kind of with Jax's angel investor hat on, it's like, hey, can I turn my 10K into 100K? Great. Yeah. And so it's a very different calculation.
Yeah. Jason, do you have anything to add to that?
Yeah, absolutely. So there's on the Cake blog, I'm writing a series about my Angel Explorer program learnings. So I've done the first 2. So I think I've got a couple more to go. So if you want to get a bit of an idea on what it's about, maybe you should apply and you don't get in or whatever, I would highly recommend applying. I learned so much. It actually was I've been thinking a lot about angel investing, but my friends and I most of us aren't wholesale investors. So we were able to put together a small investment group off the back of that. We had our own legal advice. I'm not saying Airtree gave us any legal advice, but they gave us the confidence in a range of different ways to take that step and put a little investment group together, which is awesome.
That's awesome.
And yeah, it's exciting. And now we can be because most people are excluded, unfortunately. So it's great to find ways to open up investing to more people. I would also turn people to Rain Ong's blog. He's got a really good Medium blog, a lot about angel investing. He's a pretty prominent angel investor in Australia. And accelerators are fantastic. Obviously, pick the right ones but get around them. I think for founders, they're great to go through because you can learn so much. But I think for angel investors as well, getting around accelerators and learning about startups yourself as well. If you're not experienced in startups, that could be cool, and you probably meet some really interesting people there and some interesting investors there that are experienced that you might be able to make friends with, and then potentially invest with. So I think the more we can get concentration of interested people thinking and acting in the startup way, around accelerators and things like that, I think the better for our ecosystem.
Just to pick up your point as well, there are some, I don't know whether you call them funds necessarily, but there are groups that are more active investing in that early stage. Like After Work Ventures is on the cake cap table, and they do early seed round, really smart guys. So we're actually going to do another AMA early May with After Work and a couple of other people who are investing in this early stage. It's another avenue to actually for founders to actually think about in terms of connecting with as they go through that fundraising process as well.
Yeah, nice plug, mate. And if you're not sure, just back Kylie at Eleanor or back 1013 or back those guys, because they're doing all the hard work, and you may not agree with everything they invest in, but I think you even have the choice which deals you can go into, even though they've done a lot of the hard work for you. So if you want to participate but you don't have all the time and effort, that's another smart idea.
Jess, we had a question for you and Kim about, have you gone through an accelerator? Jace, I know you're in the middle of StartMate at the moment, so maybe start with you and maybe you can elaborate a little bit more on your experience and I guess particularly in relation to not only developing the business but actually in terms of tapping into investor community as well and preparing yourself for that.
Yeah, StartMate's awesome. I'm sure everybody kind of knows that, but yeah, like you get in there and they shake you all about and make you focus on the customer more than you ever have before. And then you hear and say the word customer like 600 times more than you ever were before. And it's pretty awesome because we've just learned so much about how to be a real startup and how to really solve customer problems and not think about ourselves and get stuck in dumb meetings and all sorts of crap like you can do. Not to simplify it too much, but like there's so many smart people around StartMate that have been there and done it before. Heaps of exited founders, just heaps of great investors and so many powerful minds. And then they've got such a phenomenal network. I think through the StartMate ecosystem, you could pretty much access anybody of interest in any industry in Australia, and it extends out internationally. And learning and networking, and solving your customer problems are probably the top 3 challenges. So yeah, I couldn't speak highly enough of StartMate. I also participate and speak in, as you know, Cal, you organise most of it. Thanks, mate. Lots of other accelerators and whatnot. And I just see the power of them to help founders to just cut to the chase a bit, like there's so much you got to learn and you don't want to have to learn it all without, having someone like hack it a bit for you.
I think, I mean, just to add to that, we do a lot with accelerators and I don't think there's one accelerator program that we deal with that a founder doesn't come out a lot better prepared to pitch, whether they're actually fully ready to pitch and actually run a funding round, or whether they've just made a lot of progress around actually preparing to actually do that. That's one of the core objectives and one of the core things that they actually come out with that program. So, even if it's not StartMate or whatever, like there are so many good accelerators out there. Really, if you're thinking about going through it, not only developing the business, but actually getting ready to pitch can be a huge boost. Kim, did you go through an accelerator program yourself or?
We didn't for Mr. Yum. I actually haven't been through one myself, but definitely, like Jason said, I think there's a lot of benefit in not just the structure of the format of the program, but also in the cohort. Like you walk away with all of these, knowing all of these other founders who are at a similar stage to you, and founder networks are invaluable. When I was in Melbourne, I was part of a growth club that Startup Vic ran. Lots of founders in there that were similar stage to us. They had like a bit of a threshold over which you had to meet to get into the growth club, and it was paid, which actually was really good because it wasn't just anyone showing up, and people were like committing and showing up because it was a paid program. So we didn't, and I nearly did for a previous company. It wasn't time. They take up a lot of time. Like you've got to make sure that you're running to a schedule where in 3 months' time you want to pitch and you want to be raising capital. Otherwise, you're doing a lot of work around your pitch and your capital raising plan leading up to it. If you're in the phase of building product or doing something else, and you don't want to spend half your time on the capital raising side towards the last 4 to 6 weeks, it can be a lot of time. So yeah, just make sure you time it right, and I think it's absolutely networks and valuable.
I am just to kind of take that point further from Kim. I think investors are looking for real engagement with the products and love from customers and a sense of momentum in the company when they look to invest. And so I think timing your entry into the accelerator is really important. I've seen companies go into accelerators when they're in R&D phase and they come out still in R&D phase and like nothing's really happened, and it's a wasted opportunity because they just wasted, like Kim said, like half their days learning how to pitch, and they came out the other end. And all investors are really looking for is like kind of that sense of momentum or an understanding of, really, really early idea of product market fit. And so making sure you're in the right phase of growth, I guess, is really important.
Is that where incubators kick in? Are they sort of like before an accelerator? Is that how we see those sort of do an incubator if you're at earlier stage? Or
I mean, I think you go.
Yeah, go on, Jackie. No, I was gonna say, like, I think it's just like I don't think you have to do like one program and then another program. Honestly, like if you like startup accelerator programs, there's so much content in there, like so much about everything, like accounting, marketing, legal. Like you kind of feel like you're pulled from pillar to post around like what you should be learning, what you should be thinking about, what you should be doing. I think what Jackie's saying, like the number one most important thing is build some shitty product that solves a problem and get some customers to use it, and apologize profusely for how shit it is, but make sure they bear with you around like getting it better and getting better. If you can spend 80% of your day making your product more a better fit for the market, that is what you should do compared to like preparing to pitch. And then when you feel like you're getting some traction, then you're ready to go into an accelerator, because it's just going to accelerate that traction and bring that traction to the best possible slide that you can make that that traction slide. If it's empty, it's empty. There's nothing you can do to make that traction slide look good.
Yeah.
So go and get the traction.
If you're still in the R&D phase, it's
yeah. Like if you need if you want accelerators help you polish and shine what you've done and make it sound really succinct and like be able to say your business in one sentence, and that's hard. Like it's really hard to do. So all of that stuff is valuable, but not if you don't know what you're saying.
Okay, cool.
So
I'm just conscious of time. We're getting close. I've got a couple of questions, maybe some quick fire questions, just to answer a couple. So one, do you need a confidentiality agreement in place before you talk to potential investors?
I would say that's a negative signal.
Yep.
So we have never invested in a founder who sent us an NDA when we first wanted to speak to them. VCs meet like thousands of startups every year. Just that legal admin burden of having to manage thousands of NDAs, so that would be impossible for us. It's our ability to continue funding the very best founders. It's really a reputation thing. Our reputation is the most important thing to us, and if we were to breach confidentiality, our reputation would be destroyed. Yeah. So it's not worth it for us, and we're very conscious of keeping that information private.
Okay. Another really good question. What's angel investment appetite? Is there appetite out there for not-for-profit startups?
I don't know anything about this, so.
No, you mean sustainable businesses?
Yeah, I guess it's sustainable, but yeah.
Like there's definitely more impact investing than there was, 5 years ago. I think looking at the impact space is probably the best space that's related to
like
that.
Giant Leap?
Like Giant Leap, absolutely. I remember I tried.
There's an angel group now called the Impact Investing Group or something like that as well.
Yep.
Yep.
Okay. Cool.
But I'm investing into a full charity is probably more of a donation.
Yeah.
Technically.
Yeah.
Which is fine, of course, but that's not really investing.
Cool. Do you need to have a financial model before reaching out to angels? We've covered a little bit of this off, I think, but it'd be good to get your views.
So how I think about this is we don't expect you to have a solid idea of your future financials. But the thing I'm trying to test is like, have you thought about what the business model could be and if that business model would be scalable? And I don't think you even really need an answer as to like, it's definitely going to be this, but I think you need to have thought of, is there a way of making money from this that means that I can acquire customers for X and generate 4X from them over the period of time that I have them as a customer, and so that's kind of more, it's more a core understanding of the assumptions that in the underlying business model.
Okay. And with an angel investing hat on, Jackie, like what are the things that you're actually going to be focused on in terms of the money that's been raised for that round, and that, how do you think about that?
To me, it's just, it really depends on the company, but as a kind of broad brush answer, it's really kind of, you want to be able to use that money to get to an early idea of product market fit. Yeah. So, we have X number of people using this every day and really enjoying it, really liking it, or we have proven that we have an insight into a problem that needs to be solved, and that there are people willing to use it regularly because we built it.
Okay. Awesome.
Would you say, Jax, that it's like, I think in terms of angel investing, would you say that it's, you'd want to see most of it put towards product as opposed to sales and marketing? Yeah.
100%. Yeah.
Like not like fucking $5 off to download my app. Like, that is not what angel investing money is for. It's like, not, you don't want to spend your first 100 grand on marketing.
I even think at the seed stage, I want people to spend like 95% of it in R&D.
Yes, and R&D isn't just like software and developers. It's also the people that are talking to customers to then inform what software you're building. So it's not just all in, like, don't go out and pay your agency your whole 100 grand. Like, if you raise 100 grand, don't give it straight to an agency thinking they're going to solve your problem. Is the other, I guess, the other side to it.
Awesome. So we're just on time. So just quick wrap around. I don't know if you've got any final thoughts you'd like to share. Maybe start with you, Kim, and then Jackie, and then Jason, just as you wrap up.
I think just like traction and what does traction look like? It's simply like build something. There's so many tools out there, Airtable, Typeform, Zapier, like get something scrappy together. And that is what Pitch Black preaches. Like, try to build something without code if possible, because it's cheaper, but way faster to iterate on. Code is really hard to iterate on. So if you build something scrappy, you just remove the zap and you change it, and 5 minutes later you've got something else. So try and build some scrappy workflows at the start and see if you can get some customers using your product.
Awesome. Jackie, any final thoughts?
I was just saying, like, an optimistic note is, I just think that like angel investment landscape is going to change so much in the next 5 years. I think it's like never going to be as hard as it is today, because I think there are all these incredible Aussie success stories that are about to go public or do very big secondaries. You're going to have this incredible, all these Canva people, all these like safety culture people, all these, a cloud guru employees are going to have money to angel invest, and they're going to be, and it's going to change the landscape of angel investors in Australia from being kind of people who don't understand startups well to people who have been building startups for the last 5 to 10 years. And I think that's going to be a really, really exciting evolution. I think it's going to just completely change the landscape here in a way that is really exciting.
Fantastic.
That is exciting. And that flows into the fact that venture capital is more funded than it's ever been in Australia and globally, and companies are staying private longer. So there's more funding opportunities than ever before. You don't necessarily have to list. So yeah, like it is a cool time to be in startups. Let's leave it on a high note. I've really enjoyed this chat.
Totally.
You guys are all awesome, and thanks everyone for joining and all the great questions. And yeah, just helping to improve this part of the ecosystem is very valuable. So thanks everyone.
Thanks for joining us, and thanks everyone who's participated in the AMA today. We will make a recording of this accessible. We covered a lot of ground today, so I'm sure there'll be people who want to go back over it. We'll also put some links into some of the resources we've talked about. There's so many, both from a founder's perspective, but also from an angel investor's perspective as well. And it will make it easy for you to access some of those. Yeah, thanks again for joining us. Thanks, Kim. Thanks, Jackie. And thanks, Jason, for your time.
Thank you for hosting.
Cheers.
Thanks, everyone.